please, so the digital experience, please, Samir is one of our most talented people, so please welcome Samir. Thank you.
Hi. Mic is working? Yeah. So good morning and thank you for being here. My name is Samir Shetty. I'm part of the digital banking team of the bank. I joined Axis Bank in 2019, prior to which I was at McKinsey as a partner in the financial services practice. 3 years back, sorry, document, yeah. So 3 years back, when Amitabh unveiled the GPS strategy, one of the things he spoke about was how we want to build a digital bank within the bank and then scale that, but also port capabilities from the digital bank to the core bank so that we can transform the core bank as well. And today, we want to share an update with you on where we are on this entire journey. So we've been at this for more than 2 years now with our credo of open. So we've spoken about open in the past, so I won't spend much time here. But our principles for digital is open, which is any journey that we pick up for digital, we apply our principles. Open stands, O is for zero-based, customer-centric, zero operations redesign. P is for proprietary capabilities. One of our strong beliefs is that if we want to win in digital, we have to be digital native ourselves. We can't be outsourcing things. So building proprietary capabilities is a second principle. Ecosystems enabled, which is for E. Whatever we build for ourselves and we build for partners. And N stands for numbers. We are very oriented on metrics and on creating value. We are not running after the next shiny gold object, and we are not running after vanity metrics. So using our open principles, we've been at the journey of creating the digital bank. So today we want to unveil to you what we are calling Axis 2.0. Axis 2.0 is our digital bank within the bank. Axis 2.0 basically comprises business which is 100% end-to-end digital. No human intervention anywhere in the process. It is an independent business. It has its own P&L balance sheet and so on and so forth. And it is built using proprietary capabilities. So what does this mean? Let me take one example, which is personal loans. So if you look at personal loans, there are three ways in which the bank does personal loans. The first one is where the sourcing is physical and the processing is also physical. So salesperson goes to the customer, brings out his tab, does some data entry, collects some documents. That entire application goes to the back office, some credit manager processes it, and then it gets disbursed. So this is physical. The next is physical digital, wherein there is still a salesperson or a call center who's calling the customer. But once the customer is interested, they will say, why don't you open your app and click these 4 buttons, and instantly money will come to your account. So the sourcing was physical, but the entire processing was end-to-end digital. This is what we call assisted or physical digital. And the last one is digital, which is the sourcing is also digital. The customer discovered the loan on their own, or we did some digital marketing to generate some interest for the customer and they came and took the loan on their own. So Axis 2.0 is the third one. We have a very sharp definition of what comprises digital. In the case of personal loans, in H1 of this year, Axis 2.0 comprised 20% of incremental disbursements by value. By volume, this number is closer to 30. And this Axis 2.0 part of the PL is growing at 54%, which is significantly higher than other segments, as you can see. And so what is happening here over time is what is physical is moving to assisted, and what is assisted is moving to fully D2C. So that was a quick definition of what Axis 2.0 means. The same principle applies across every product line. And so this was to illustrate what this means. So what are our aspirations now for Axis 2.0? We want in 5 years for Axis 2.0 to be a fully digital at-scale bank in the country. 4 aspirations we set out. The first one obviously was to set this up, which kind of we've done. The second is that we want to acquire new customers at scale. We want to become a digital lending powerhouse. And equally importantly, we want to create best-in-class global digital capabilities. And some metrics we put out there is that we want to be a top 5 global mobile app. We want to be known for our in-house capabilities, our people, our processes, our technology. So these are some aspirations we've set out. We made some progress. There is obviously a very long way to go, but we've made some reasonable progress on our Axis 2.0 agenda already. And so what is it? The first one, Amitabh already spoke about. We are already delivering distinctive customer experiences. We are today the highest rated mobile banking app in the world. This data, by the way, is something that we will tell you at least 7 times today, because, because we want to ensure that we are kind of making the point. But we are very well rated. In our peer set, our closest peer in India is at 4.6. Most of our peers are sub 4.4. We have today 11 million monthly active users on our mobile app. 11 million monthly active users on our mobile app who log into our app 160 million times a month. So we have 160 million eyeballs on our mobile app every month. And so we have great experience, we have a large and a fast growing user base, and that user base is very engaged with us. Also, we made progress on scaling our products and our book. So on the balance sheet side, our CASA has grown this year versus last year for H1 by 200%. FD inflows have grown by 40%. We are already at scale, by the way, on many of these products. On the loan side, on PL, we have grown by about 40%. On auto loan, we've more than doubled. And on other retail loans, again, we've more than doubled. So again, kind of, we are at scale, we are growing rapidly. Now, the other point we made was how we kind of take capabilities from the core bank and port it to the, take it from the digital bank and port it to the core bank. So I go back to my favorite PL example. So if you look at personal loans, Axis 2.0 is 20%, but including the assisted, which is the same journey, but used by the physical sales force, is 55% of disbursals, is 70% by volume. This is 55% by value, 70% by number of loans processed. So the journey that was built for the digital has now been adopted by the core bank. It is impacting volumes at significant levels for the core bank. This 55% comes at 30 percentage point higher NPS. 30 percentage point, right? Not 30%, but this is absolute kind of delta. It comes at 30 percentage point higher NPS. It comes at 100 bips higher yield and 15 bips higher fee. So the journey that was built for the digital world has come to the core bank. It is delivering better experiences at fundamentally better efficiencies. At fundamentally better efficiencies, the cost of doing all of this is, as you can imagine, fundamentally lower. PL is an example. The same kind of applies across all other product lines as well. As you will see, Axis 2.0, we are at reasonable scale already. We have a long way to go, but we are already at reasonable scale. Including assisted, we are already in some products up to 80% of business that's happening. And all of this business is happening at significantly better customer experience and fundamentally better efficiency and economics. So in summary, what is Axis Bank? What is Axis 2.0? A, we are delivering distinctive customer experience outcomes. B, we are building a new business for the bank, which is already at scale, growing rapidly, and accretive to economics. Finally, we are having positively impacting the core bank itself. So this is a little bit of the what. Now, maybe I'll shift gears into how have we come here and what does it take to build all of this. So one more time, 4.8 rated app. We have, by the way, now 18 lakh reviews. This is the 17.5 is a little dated. As of today morning, we have 17.96 lakh reviews on the Play Store. So how have we got here? In our minds, there are three things that get us here. First is the set of proprietary in-house digital native capabilities that we built, which enable us to be responsive and to think customer first and to deliver products in a digital manner. Second is that we are building delightful customer experiences through the new journeys that we are building. And finally, our journeys are delightful, but also there are many journeys. So we have the full suite of products and services that are available fully digitally, which our customers can experience. And a combination of these factors is what we believe gets us to the 4.8 and all the other metrics. I will deep dive on each of these, starting with the capabilities. So on capabilities, in our minds, there are 4 elements of the capability stack. The first is the team. If we have to deliver digital, we need a team which thinks digital and which is digital first. Second is design. Design is at the heart of digital because you have to take customer-centric view and you have to redesign from a customer perspective. Third, engineering and technology, which obviously is core to digital. And fourth, data and analytics, which again is very crucial. I will not spend any time actually on data and analytics. My colleagues will, from the BIU team will come and talk to us about what we are doing there. But let me spend time on the first three. So first on the team, we have, as Amita mentioned, 1,500 people who are dedicated to a digital agenda across the bank. We have a 200-member product team. This is the digital product team. This is not the banking product team. It's a team that thinks digital. We have an in-house 200-member engineering team. We have an in-house 30-member design team. 75% of our new hires in the digital team come from non-banking backgrounds. So they come from fintech, e-commerce, consulting, IT, many are freshers, etc. And our digital banking team is full stack, which means every capability that is required is kind of available with us. So whether it is product or it is design, engineering, governance, partnerships, digital marketing, all of this is part of our team. So it's a nicely well-contained end-to-end team. We have more than 30 people today here we have some kiosks outside. In the break, we will take you there. And these kiosks will be demonstrated by our teams. So we have more than 30 people here. And I'll request and invite you to come and interact with them and to see for yourself the team that we built. Moving on to design, as I said, design is a core capability. We have a strong design team, and we are building institutional design capabilities. So two capabilities that we want to talk about today are Sub-Zero and Accord. Sub-Zero is our design system, and Accord is our illustration system. Now, what is a design system? A design system is a system which basically atomizes all components of design in a standardized way. Let me run a video, and then I'll maybe talk a little bit more about what the design system means. Great. So as you could see in the video, Sub-Zero is a design system. It's basically a website, Sub-Zero.accessbank.com. It is open for all. You can go and see it when you kind of go back to your desks. What is Sub-Zero? It has a set of all components that is required for design. So the example that was shown in the video was a button. If a designer wants to put a button in a screen, all the designer needs to do is go to the Sub-Zero and look at buttons. It has everything. What the size of the button should be, what is the color, should the ends be rounded or sharp, what does a primary button look like, secondary button look like, font size, X, Y, Z, etc. So designer doesn't need to think about how to create a button. They just pick it up and put it there. And this, by the way, has been aggregated all the way up so that it's easy for designers. Also, the code for creating that button is there. So a developer doesn't need to now code. They just kind of go there and pick up the code and put it here, right? So it makes the entire design process quite simple. We actually have a great demo. I'll request all of you to actually go to the Sub-Zero demo, and they will show you live how they design screens and how they also code it. By the way, everything that you see in this session today, the presentation, the videos, built by our design team using Sub-Zero principles. The second thing that we want to talk about is Accord. Accord is our illustration system. So we use a number of characters, as you saw in the video, to communicate to our customers. Again, this entire thing is institutionalized, defined. We have a certain set of characters, certain ways that they move, certain things that they say, etc. Again, helps us to make design simpler. We believe we are the first bank to have both of these systems in the country and perhaps even in the world. So what does this do? Design has 4 impacts for us. First is it is one language. Irrespective of the journey that you go to, irrespective by who it is developed, you will feel like you are in Axis Bank because the design language is the same. Second, it reduces development effort because a lot of the code is already there. Our design effort, by the way, is already down by 30% because we can kind of, everything is commoditized, right? You can just pick stuff up. And it creates for an inviting experience for our customers. Not just our development team, but a large number of our vendor partners are now using Sub-Zero for their development because we built it in an open format, anybody can access it. I move on to engineering. Engineering is at the heart of digital, and our engineering is based on 3 principles: Agile, DevSecOps, and microservices. So we have set up our CI/CD pipeline, our continuous integration, continuous deployment pipeline, which helps us to do many deployments parallelly and seamlessly. We work in an agile mode, so we work in garages. We create teams which are cross-functional. It includes business, product, risk, compliance, engineering, analytics, and so on and so forth. And that team, in a sprint-based manner, deploys things and develops things versus in the traditional waterfall manner. And finally, we build stuff in a microservices-based architecture. What that means is we build things and that one thing is then used across products or across journeys so that we can get scale and we can run things more effectively. We use a whole host of new age tools and technologies. Many of them are listed here. As we go to the kiosk, our teams can kind of demonstrate more of these to you as well. This is our DevSecOps pipeline. DevOps is quite popular. In banking, you need to do DevSecOps because security is integral. So what this does is, from the time a developer writes the code to deployment, that entire journey is automated, including the UAT testing, the security testing, and so on and so forth. And it helps us deploy code much more faster and in a seamless manner. So what has this helped us achieve? These are the number of deployments we've done by each product. Just in FY23, we have done more than 3,200 deployments. That translates to about 40-45 deployments a day. And something like this is just not possible if you don't build a system of this nature. And that's what this has helped us achieve. Microservices-based architecture. So I want to talk about Vision. Vision is our video KYC platform. We built it as a microservice. We built it once, and it is being used across multiple journeys. So Vision is a microservices-based journey. It is cloud native, built completely on the cloud. It is exposed not only to internal applications, but also to partners. So many of our partners use Vision for doing video KYC. And it is modular, so we can make product-specific modifications depending on the journey. So credit card may have different requirements compared to savings accounts. We can do all of that here. What has that helped us do? Today, 15 applications use Vision for video KYC. 5 partners use Vision for video KYC. We do 5.5 lakh video KYCs per month in the bank. 5.5 lakh video KYCs per month. And our conversion rate when customers go through the video KYC route versus a physical route is 2x. It's 2x. And so we are kind of able to deliver that impact as well. So the first part of how we are able to deliver the impact was around the proprietary capabilities. Let me move now to the delightful customer experience. And I will take the example of a mobile app to talk about how we've done this. So we launched a new app in June this year based on 4 pillars. And those pillars are: first, we've created an open app. Today, any citizen of India can come to our app and get any banking product. Any citizen of the country can apply for any banking product and get it 100% digitally and instantly from our mobile app. So that was principle number 1. Principle number 2 was to revamp the user experience, change the UI, UX, make it look much fresher, as well as reimagine the journeys that are there in the app. Third was to create hyper-personalized nudges. So our app today is hyper-personalized. I will demonstrate this a little bit subsequently, but what Rajiv sees when he logs in and what I see when I log in are 2 different things. And finally, we provide an always-on, low-latency experience. This is critical. Any customer experience, the greatest customer experience, the greatest journey is not useful unless it is always available to the customers and it is, the journey is slick, it is fast, and so on and so forth. Let me deep dive on each of these. First is the open app. So this is what our landing page of the app looks like. We have any customer of the, any citizen of India can come to our app, open a UPI handle, and do transactions via UPI. As we speak, 6 million non-Axis Bank customers use our app or have registered their UPI handle on our app. They can open a savings account or a current account. They can avail instant personal loan. They can get a credit card issued digitally and instantly. They can open an FD. And there are other products available as well. So, again, I repeat, any citizen of the country, whether they are our customer or not, can come to our app, get any product that they would like to take from us. And we build the digital journeys for all of these. The second is the revamping of the user experience. This is the landing page of our mobile app. So as you can see, it is quite slick. It looks new age and it's kind of very refreshing. We moved from the tab-based approach to a customer journey-based approach, and we have like a scroll screen. So what does this app do? You can see all your relationships in one go upfront. You can see the pay button because customers come to our app for pay button. We've integrated all kinds of payments under one button. You can see all products which are listed under one bucket and services as well. If you scroll down, we have a full new engagement layer. You can see your transactions, you can see upcoming bills, and then you can see the recommendations which are made specifically for you as a customer. And finally, we have some offers. These offers are also personalized. So people see what offers they have here versus generic banners. So new look and new age look and feel. Moving on to journeys. So we've also taken the opportunity to redesign our customer journeys. This is the UPI experience for new to bank customers. A new to bank customer, once they kind of log in and they create the handle, this is what they see. So they will see all modes of making payments. UPI requests come upfront, right at the top. They can link their bank accounts. They will see how those accounts are doing. They can check their balance, etc. There's a floating QR scanner so that they can make scan and pay payments at any point in time. Importantly, for new to bank customers, we have here the products that they can use. So as an example, they can apply for an FD or a credit card, etc. And then resend pays and so on and so forth. So we've completely transformed the UPI journey in the app as well. The other journey I wanted to show was the FD. FD is a very kind of simple and an old product, but we have created a journey we believe is best in class in the industry. It's a 3-click, one entry journey. We show upfront on the landing page various popular options, so customers don't need to go and select their tenors and so on and so forth. The customers then enter the amount and they can say okay, and their FD is booked. So it is that simple. We've also introduced some customer-centric options. As an example, if you want to name the FD because it's for some specific purpose, you can do that. Or if you want to change the nominee, etc., you can do that as well. Also, when customers prematurely try to close their FD, as an example, we offer cross-sell, upsell options. So if somebody is trying to close their FD, we will tell them, why don't you take an OD instead of closing an FD and losing your interest? So what that does is it creates another opportunity for us to offer a product to the customer. The customer's interests are also maintained, and our FDs remain, and premature closures go down as well. So moving on to the third element, which is the hyper-personalized nudges. What we've done is, working with our analytics team, create very sharp and focused nudges for customers. There are a large number of these. I will demonstrate a few. So the first type of nudge is a regulatory or servicing nudge. So one example is if your KYC is due for renewal, 30 days before, we will show you on your mobile app landing page that your KYC is due for renewal. And you can click on the update now, and it will take you to a page where you can update your KYC. Or if you're on the last 2 leaves of your checkbook, we will show you a nudge to say that order a checkbook now. And you can click there and kind of get a checkbook instantly. We have cross-sell and upsell nudges. So as an example, if you get your bonus, which is a large credit, we will show you a nudge that you have received a large credit and do you want to invest, let's say in an FD or a mutual fund. If you click on the invest now, it will take you to the investment section and you can make your investments. Or if you're falling short of funds and you have a personal loan offer, we will show you a falling short of funds kind of a nudge. Again, you can click there and apply for the PL and kind of take it. And finally, we have payment and investments nudges. So if you have an upcoming SIP, a week before that, we will remind you on the app itself that there is a SIP upcoming, please keep your account funded. Or if your credit card bill is due, we will nudge you to pay the credit card bill. And again, all of these, you can just click on the CTA, the call to action, and complete the action digitally on the app itself. So we spoke about open app, revamping experience, hyper-personalized nudges. The last one is always on low latency experience. And this is where the engineering and technology comes in. So this is some stats on what has happened to our app in the last few months and how we've been able to crunch things. Our app is high availability. Our availability is 99.9%. More equally importantly, we've been able to crash the app launch time, the dashboard launch time, the crash rate, and the app not responsive rate by something like 30 to 50%. So this is incrementally kind of what adds to the customer experience and improves our this, by the way, I'm taking the mobile app experience here. The same thing applies to every product that we will talk about, that we take a very engineering-led approach and we try to reduce the latency, we try to reduce the crash times, the non-availability times, and so on and so forth, to offer an experience to the customer that they find really delightful. So what does the mobile app do for us? Number 3, 4.8 and 11 million. But more importantly, on the financial metrics, a mobile app active customer maintains 2x the balance of an inactive customer. And a mobile app active customer has more than 2x the PPC of an inactive customer. So the 11 million people that are coming to us are maintaining 2x the balance of the other folks who are kind of not coming to us because the engagement is high and so on and so forth. And they have 2x the products per customer. What this does to the franchise, as we move from the 10 million, 11 million to a larger number, we are also hopeful that it will show in the balance growth and it will show in the products growth as well across various products. Operational impact, 65% of the bank services are now happening on the mobile app, and our app sees 160 million logins, as we said. What this means, by the way, is that those many services are not going to the branches, and those many people are not going to the branches, or they are not going to the call center, or they are not going some other physical channel. And that basically releases capacity for our frontline to focus on higher value added items. So this is a little bit of our impact from the mobile app. I move back now to the what has it taken for us to get to this. We spoke about proprietary capabilities. We spoke about delightful experiences. We will now move to the full suite of products and services. So how do we kind of take the same delightful experience and apply it to each and every product that we have in the bank. I have a long range of products here, so I'll try to be swift. We anyway have kiosks outside, so even if I'm not able to cover everything, our teams will demo to you each of these journeys in detail. So the first product that I want to talk about is ASAP, which is our digital savings account. This is our digital savings account journey. I'll not go into the details of how the journey works. But it's a simple 4-step journey. At the end of the journey, we give the customer a virtual debit card. They can start using the debit card immediately, and they can start doing transactions. We are very focused on quality. We've taken a stance to say that we don't want to run after numbers. And so we have initial funding, we have minimum balance. We charge 500 rupees, 600 rupees actually, to every customer for the debit card so that we get the right type of customers in. ASAP is built using open principles. It is completely zero operations. There is no human involvement. It's built using sub-zero design principles. It is fully proprietary. ASAP was conceptualized, designed, developed, and it is run fully in-house by our team. It is cloud native. It uses all the CI/CD DevSecOps principles. And as I said, we focused on quality so that the metrics kind of shape in the right direction. In fact, we've recently even upped our focus on quality because we saw certain things in the data that indicated that we should do that. So what ASAP does, ASAP helps us get access to a customer segment that we are otherwise not able to get access to. So as an example, the ASAP customer is younger. 70% of customers are less than 32 years of age. They are salaried, so 2x more salaried. And they are more urban. So 50% of ASAP customers are urban. So we are targeting a set of customers that we typically would not get to through our normal physical routes. What is the impact of ASAP? On the customer front, our onboarding NPS is 10 percentage points higher, and our account opening TAT is lower by 82%. On the operation side, it's a zero document process, so there is no document involved from the customer, and there is zero NFTR. It's all first time right. There is no front end, back, and there is no back office, and so on and so forth. And from the financial perspective, our focus on quality has resulted that our balance per account is 22,000 rupees. This is at the portfolio level. We have 22,000 rupees per account as balance. Our cost of acquisition is 40% lower compared to the physical channel. And our digital activation, which is the share of customers who use our mobile app or internet banking, is 23 percentage points higher. So our focus on quality is delivering the financial impact as well. And we are looking to now take it from here and scale it even further. The second product I want to talk about is Maximus. Maximus is our digital lending stack. Our digital lending stack is now complete, both for loans and for cards, for all customer segments, which means existing to bank, new to bank, known to bank. Any citizen of the country can get a digital instant loan from us through our digital channels. And so what does this mean? We built a large number of capabilities, and I don't think I'll do justice to go through each of these, but taking from filling the application, wherein we figured out ways to pre-fill data for the customer, either from internal sources or from external sources. We have integrations to 17 systems, which gets instant digital data so that we can run a large number of checks. Validations, as an example, how do we do employment verification? It's all digital. Underwriting, we have this swim lane approach. So a customer comes, they give us our basic details. We figure out which underwriting journey the customer needs to go into. If it is pre-qualified, then we take them somewhere. If it is an NTB customer, we take them somewhere else, and so on and so forth. We have an account aggregator-based underwriting journey. I'll demonstrate that as well. We have real-time pricing. We are able to do KYC. For existing customers, we use the bank KYC. For new customers, we do video KYC. So we have this fully integrated. And finally, disbursal, which is signing the agreement, doing the disbursal into the other bank account for NTB customers or our own bank for ETB customers, setting up an eNACH or an SI, etc., etc. All of these capabilities are built, and they are all integrated for all products. So whether it is like you take any lending product, we have this entire capability built. So this sounds easy, but Maximus requires, as I said, 17 different integrations with systems, internal or external. From a customer journey perspective, it is very simple. It's just one click and so on and so forth. But when the customer does one click, we are calling 7 external systems and getting data to see if the customer is a genuine customer or not, if they're in some fraud database, etc., right? So 17 different integrations just to make this system live. Maximus, again, built using open principles. This slide will come again and again. It's just to kind of say that we are following our open. I will not go through the details, but it is fully built using open principles. Let me spend 2 minutes on the account aggregator. I'm sure all of you are aware of what the account aggregator is. Just a brief introduction. Account aggregator enables any customer to share their information, today banking information, over time any information, with any other regulated entity for the purposes of getting a financial service. And so if you look at the ecosystem, there are 4 entities. There is the account aggregator, which is taking information from one entity, giving it to the other. There is the FIP, which is the financial information provider, which are entities like banks, NBFCs, etc., who are giving the data. And there are FIUs, which are entities which are taking the data and then providing some subsequent service. And obviously, there is the customer. So now the account aggregator ecosystem has grown very rapidly. Between February and October, the number of accounts linked has gone up by 20x. It's gone up from 1 lakh to 21 lakhs. The number of consents raised has gone up by 6x. And the monthly accounts linked have gone up by 5x. So today, on a monthly basis, 3 lakh accounts are being linked in the account aggregator ecosystem. We were the first bank to go live on account aggregator. And we are, as Amitabh mentioned earlier, very bullish on this entire space. And we are introducing newer and newer use cases to kind of benefit from the ecosystem. So our account aggregator use cases today around lending cover the entire lending suite. So we have personal loans, we have auto loans, we have two-wheeler loans, we have business loans, we have credit cards. For all of these products, any customer can come to us through the account aggregator, give us their bank data, and we can provide them that product. So what does the account aggregator journey look like? I'll take a personal loan example to illustrate. As you can see, personal loan is my favorite product. This is the account aggregator journey. It's a simple 5-step journey. The customer comes to our app, chooses to give us data using the account aggregator. We take one OTP, which is to take consent from him to ping his bank. Using his mobile number, we ping the bank, figure out which bank it is, and then show him the accounts. He chooses the account, gives us one more OTP. And with that OTP, we show him what data we want, what duration, what type of information, etc. He says okay. As soon as he says okay, which is approved on the last screen, we get the data, we are able to real-time analyze it and show him the offer. Right? So this is the journey that we have. We will demo this in detail actually subsequently. There is obviously a lot that is happening post and before this journey. So after this journey, we have to do the e-sign, e-NASH, etc. And before this journey, we have to do some Aadhaar and so on and so forth. But this part of the journey is basically just 4 steps. We have worked to optimize this journey with our partner. And we believe today that our conversion rates are best in class in the industry, ahead of other fintechs as well. And this is information that we have from our partners, who are the account aggregators. So what has Maximus done for us? On the customer front, and this by the way, again, all personal loan data, but equally applicable to other products. Our NPS is 30 percentage points higher for onboarding. The onboarding TAT is down by 90%. No documents, no NFTR, hence no back office. On financial impact, digitally disbursed loan deliver 100 bips higher NIMs, 15 bips higher fee. They come at 55% lower costs, and they today have 22 bips lower risk. On risk, our view is that over time it'll kind of come to par with the physical. But what we see today is that our risk is also better than physical. We'll move on to credit cards. On credit cards, we built a full credit card life cycle, which is acquisitions, where we acquire customers fully digitally. We have today 35 plus acquisition partners, and we do digital sourcing of all types of customers, as well as managing the card, which is once you kind of acquired the card, how do you manage the card fully digitally? We have 15 end-to-end services. Today, on a daily basis, 1 million unique customers come to our app to manage their card. Every day, 1 million customers come to our app to kind of go to our card section and do a few things there. And finally, upsell and cross-sell. So we have 4 cross-sell and upsell products across all our channels, which we are able to offer our card customers. So let me start with a video which shows what our managed usage looks like, and then we'll cover some other elements.
I'm ahead of the game. I'm ahead of the game. I'm ahead of the game. Well, the phone is always ringing. I'm caught up on the line. Got a string around my finger. Remember who am I? I'm a boss and I'm honestly up my rocker, but follow me. I'm ahead of the game. I'm ahead of the game. I'm only a butt slinging. I'm working overtime. Got a song and I'm the singer, the melody, the vibe. I'm a prodigy, logically. I'm impossibly wanted. Then they'll remember my name. They'll remember my name. Ooh, well, I'm ahead now. I'm ahead of the game. I'm ahead of the game.
So that was our manage card section on the app. You can do whatever you want with your card, change the limits, enable international, disable international, look at your bills, pay your bills, etc. Also, we do a very intuitive cross-sell and upsell. So if there is a transaction that you've done for more than 2,000 rupees, on the landing page of the credit card section, you will see convert to EMI. There is a nice arrow. If you click on that, one click, the transaction gets converted to EMI. If you want a loan, it's a one-click journey. Our teams will again demonstrate all of this to you when we go to the kiosks. Olive built again using Open in Action, built fully by our in-house team, and by the way, built for partners. We have a large number of partners live. Sanjeev, our head of cards, will talk about this in more detail in our afternoon section. But the most popular one, the most successful one is our Flipkart partnership, where we've done more than 3 million cards, and we kind of significant spends and monthly spends are great and so on and so forth. More details in the afternoon session again. We have actually one of the kiosks we have is a live real-time card dispersal. So you can issue a card, a physical card, instantly. I'll again request all of you to try that and get a card for yourself. So what has Olive delivered for us? So there is obviously 80% reduction in acquisition TAT. 84% of credit card services today are being done digitally. So instead of calling the call center or going to the branch, they come to our app and they do whatever they want to do, 84%, with zero NFTR. On the financial side, we do 4 lakh monthly cross-sell upsell. 67% of our cross-sell products, which is all this EMI, instant loan, upgrade card, enhanced limit, all happens digitally. Customer does it on their own. And 24% of our cards today are sourced in the Axis 2.0 manner, right? This is not assisted. This is fully 100% digital. 24% of our cards, 1/4 of our cards are sourced fully digitally today. I'll move on quickly to the investments platform. We have a full spectrum of investments available on our app. These are all the products, mutual funds, DMAT, etc., etc. We have gold products. So we are the only bank, only large bank in the country which is offering digital gold. We offer sovereign gold bonds. We offer floating rate savings bonds, PPF, NPS, etc. And for all of these products, you can buy them on the platform. You can do a SIP. You can manage the product. You can also sell it, provided it is, it is sellable, quote unquote, right? So all of this can be done on our platform, and it is in one place, and it is very simple journeys. Let me illustrate this to the mutual funds example. These are our mutual fund screens. You can kind of see various types of funds. You can see their performance. There are some funds which are Axis Bank Select, which means our investments team have looked at it and they feel comfortable. Once you selected the product, you need to choose whether it is a SIP or lump sum, put the amount, press OK, and put your OTP, and the investment is done. Today, almost 51% of our incremental sales in terms of volume is happening in this manner. So what has this delivered for us? More than 1 million customers have invested via the app. The investment TAT is basically down to zero, right? So 99% is just a way of saying that. No documents, no NFTR. In H1 of this year, just via investments, we made 37 crores of fee income. And the balance for customers who use our investment products is up between 30 to 80%, depending on the segment. So for premium segments, the balance is up by 30%. And for retail segments, the balance is up by 80%. If somebody invests through us, they keep 80% more balances in their account. So it's not only a fee source, but actually it's a great source of engagement and deepening the relationship for us. Forex, we have many Forex solutions. So we have today a Forex card, which is available for existing and new to bank customers. Today, you can do outward remittance for equities. If you want to buy Google shares or Apple shares, you can go to some of our partners. You can kind of buy the share there. And from there, the conversion of rupee into dollar is done digitally, instantly by our platform, fully integrated with our partners through APIs and so on and so forth. And we have outward remittance for other use cases as well. And we are, by the way, both of these will come for NTB very soon. In fact, equities is right now in CUG, so it should come out very soon as well. These are our Forex card issuance journey. Again, very simple journey, no document. By the way, we are the only bank which has a no document journey for Forex card in the country. The Forex card gets issued instantly. You can pick it up either from the branch or we will deliver it to your home. You can choose whatever you would like. And then, you are kind of set to go. So what is now this delivering for us? More than 3 lakh customers have used Maverick, which is our Forex platform. The reduction in TAT is 52%. Here there is a home delivery. So, there is still a physical kind of channel, and which is why the TAT reduction is not in the 90s and so on and so forth. No documents, no NFTR, back office just gets crushed quite dramatically. And cost of acquisition is 84% lower. And today, 63% of Forex cards are being issued using our Maverick platform. We spoke about products, but one of the important things for engaging customers on the app is services, which is you want to change your address, you want to change your nominee, and so on and so forth. And so we started this program called Branch of the Future. which was aimed at offering D2C options for customers so that they don't need to go to a branch, they don't need to call a call center or an RM on servicing, to reduce operations load at the branch. Because if you go to a branch to do any of these, you will have to go with a document, somebody has to check it, somebody has to cross-check it, then it goes to some operation center, somebody has to enter, then it may come back because there is something not right, you will again have to come to the branch and so on and so forth. It's a lot of load for everybody, for the customer, for the front office, for the back office, to reduce back office operations. And finally, to improve STP and to improve the customer experience itself. So there are many services available today. In fact, 90% of service requests that used to go to the branch in 2019 are now available via our digital channels. This is one example of Update Nominee, which we made available. What has this delivered? Today, 65% of service requests are done by the customers themselves, and it is done digitally. 94% of these are STP, which means it is done instantly in that moment. There is no manual back office, nothing. And obviously, both operations load goes down and the customer experience goes up quite dramatically. There is zero operation effort for the 95%. For the other 5%, obviously there is some operations effort. But for the 95%, there is zero operation effort. Overall, the NFTR, which is not first time right, is less than 1%, including the 5% as well, right? So again, kind of great impact and service for our customers. The other piece that I wanted to talk about was APIs and developer portal. Amitabh spoke about how partnerships is critical. We built a partner-ready tech stack, and we have a developer portal, which I'll demonstrate in a minute. Today, we have 270 plus retail APIs, retail banking APIs across all products, loans, deposits, cards, etc. We have 80 plus corporate banking APIs on collections, trade, etc., etc. We have the first in the industry end-to-end digital onboarding journey for developers. So developers can come to us and fully digitally onboard themselves and start doing kind of looking at the APIs, starting to the UAT and so on and so forth. And we have a developer-centric portal where we've created the portal keeping the developer in mind. So we have sample codes, we have some UAT scenarios, we have some sample flowchart and the like. So what does this look like? This is a not great snapshot of our developer portal. Unfortunately, we couldn't get the high resolution. On the left, you will see the full set of products that we are offering. So it is indeed the full set. What we are now showing you is the loan on card, which is if you have a credit card and you want to convert and kind of take a loan on that credit card through a partner. This is what the flowchart looks like for that journey. So when a developer comes here, they can visualize what they need to code because the flowchart is here. The API list is next. So for each of these elements, there is an API. So they can kind of pick that API. There are test cases at the end. So as a developer, you don't now need to start thinking about what should be my user flow. Am I kind of covering all edge cases, etc. All of this is already documented. What we also do is we provide the sample code. So this is the request response of the API. The developer can just copy the request and put it into their code. They don't need to again rethink and so on and so forth. There are similarly test cases, so they can run the test case and they can see if the code works along the test case or not. And so, as I mentioned, the onboarding on this is fully digital, and it is, we believe, again, one of the distinctive capabilities that we built in the space. We have, as I said, more than 30 colleagues who are manning kiosks outside. I think in the break, we will invite all of you to attend these. Many products we covered today, but kind of given the time, I don't think it would have done justice to talk about all the products. There are a bunch which we've not covered, but will be demoed outside. And those are these ones, which you can see what's happening outside. So now, we spoke about the how, we spoke about the proprietary capabilities, we spoke about how we are delivering, creating journeys which are delivering delightful experiences, and we spoke about the full suite of products. Now, why is this? Can tomorrow we wake up and say that we'll rebuild this again? Or is building this takes time and effort and complexity? It does, by the way. We've been on this journey for 2 years, and we are nowhere close to done. We have a long way to go. But we've been on this journey for 2 years, and it has taken us a lot. Why is this difficult? It is difficult because this requires a large number of things to come together. First, you need to get the right people. So whether it is design, governance, business, digital, engineering, product, marketing, you need to set up the team. And hiring the folks it is very difficult, but actually it is the easiest part. It is getting them to work in this context of banking, which is very different from a fintech or a tech context, to gel well with the rest of the bank, gel well with each other, and to create the processes that enable delivering great experiences is the tough part. But this is just the first part, which is you have to get the people, you have to get them to gel, you have to train them, upskill them, get them to work well with each other. You need to use, then these people need to build the engineering for you. They need to build the agile processes, they need to build the Sub-Zero, the DevSecOps, the Accord, CI/CD, automation, etc., etc., etc. So you have to get the people, those people have to then come together, they have to build all of these platform capabilities. Once you have the platform capabilities, you have to build the microservices. So you have to build the underwriting, the authorization, the pricing, integrate with those 17 systems, go through the entire compliance process, CI/CD, security, etc., and get all of that together. Once you have built the microservices, you have to build the front-end journeys. So you have to build it on your mobile app, you have to build it on your internet banking, you have to build it for partners, you have to build it for your website, you have to build it for what, and so on and so forth. Once you have that, product doesn't sell by itself. You have to kind of, do the distribution as well. So you have to do the sales. So you need to do campaigns, digital marketing, you have to do audience building, you have to figure out how to do this via bank channels. And finally, you have to have the right governance around it. So you need the risk, you need compliance, you need cyber security, all of it to fit. And as you can see, this is a game of Tetris. So unless the pieces fit nicely, it's game over. And we are still playing the game. And so we believe that the reason why this is tough and the reason why we have we believe an advantage here is because we've been able to bring all of this together in a nice way in which it fits nicely and further the agenda. So with that, I kind of come to the end of the session. Like Amitabh, I'm 10 minutes early, which is great. To conclude, what is Axis 2.0? Axis 2.0 is a digital bank within the bank with an aspiration for market leadership. We are already delivering distinctive customer experiences, and we aim to further deliver them. We are operating at scale, growing rapidly. We are accretive to bank economics. We are extending our impact to the core bank, and we are doing all of this on the back of distinctive in-house proprietary capabilities. With that, I conclude my session. Thank you.
So, since we have time, you want to go for a Q&A with Samir, then we can sort of do that and then, yeah, Samir?
Yep. Yes. Yeah. So two reasons. One is that when the service is faster and when the experience is great, customers are okay to pay a higher fee, number one. Number two, in digital, the fee is determined by the machine. In physical, there is a negotiation. And so the customer will come to the sales guy and, kind of have a negotiation and so on and so forth. And so typically the fee kind of, drops a little bit in the physical world.
Hi,
Yep.
Samir. Thanks for this detailed presentation. So one question is, when you compare with the other two private sector banks, the large ones, where are you ahead, like in which parts of this you are ahead and which parts you are, trying to still build? If you can just share something.
I can answer that clearly. Yeah, okay. So look, this is my view and my perspective. I think on the retail banking journeys, I would believe that we are at par or ahead of everybody in this country. So our mobile app, all the products that we showed you, if you did a like-to-like comparison, and it's important to the what people define as digital is very different across different banks. But if you did a like-to-like comparison, we believe we would show positively. Where we are still building and catching up is in the commercial and corporate side, where actually we are reasonably good, but at least one peer is ahead of us. And there is in the afternoon, Vivek will talk about all the efforts we are doing on the Neo side, Project Neo side, to build what will be distinctive there. So the same principles that we use on the retail side, we are kind of extending on the corporate side as well. And I think the one area of clear distinctiveness in my mind. See, look, at the end of the day, products people will have 6 months here or there. So if I have a savings account, the other guy will also have a savings account 6 months down the line, right? What we believe will stand us well is the capability set that we built. And there I think we are, there is kind of distance between us and everybody else in terms of the team, the processes, the platform capabilities that we built, and how we are working together to deliver stuff.
Great, thanks.
Yeah.
Yeah.
Okay.
Hi.
I think it's working.
So one question is on the account aggregator utilization. What percentage of your overall loans now go through the account aggregator journey, as opposed to just the regular physical or assisted journey?
At this point, it is very small actually, because the kind of in the system only 6 lakh consents are being raised a month.
Right.
Right. So you can imagine how many we are raising, but it is material. So we do mid double-digit crores of disbursements every month through the account aggregators. So it's not small. I mean, it is not irrelevant, but it is not 15% of our disbursements at this point in time.
And what is the hurdle? Why is it just this 6 lakhs, and why not much higher than that?
I think it's just a matter of time. So look, first, all banks need to come on board. At this point, about 16 banks are on board, but there are some large ones which are yet to start sharing data. Second, there have to be enough use cases. And third, there has to be customer. This is like UPI, right? UPI in 2016, that it was there and some stuff was happening, but the takeoff happened a little bit down the line. And the same I think should happen here. If I take the case of UK, in UK there are 1 billion consents raised per month for a country of UK's size.
Right.
So you can, if kind of we are able to crack it, you can imagine where this will be.
And the second one is on this team size for Access 2.0. Now you said you have about 1,500 people. Incrementally, do you think this team is already right-sized and you don't need to add, and maybe you can outsource whatever needs to be done to vendors? Or is it all going to continue to remain an in-house project and therefore you'll keep building this team size? So how do we think about that?
Yeah. So see, firstly, 1,500 is the set of people across the bank, right? This is not just the digital team. There are people in technology, there are people in each of the products and so on and so forth. Even in digital, we have now reached a point. So in 2019, our team was 60. Today, just the digital team is about 550. Incrementally, we don't see this growth continuing. So I think we've got to a point where maybe we grow by 5-10%, but we don't see it, the size again doubling next year as an example.
Thanks.
I think there's a question. Sorry, okay. Okay. I think from manage. Go ahead. Sorry.
Hi, Sameer. This is
Hi.
Rahul from Goldman Sachs.
Hi, Rahul.
2 questions. One is, you talked about the PL as an example. So just to take a step back, when did you actually start the full journey of onboarding the customer digital to digital, and how long did it take you to get here to 20%? Number one. Number two, the NTB customers that are coming to your platform, can you just talk about what kind of customers are these? Are these a customer from, let's say, public sector, or they're absolutely new to the banking system? Just some color out there would be helpful.
Yeah, sure. So actually for the NTB, maybe I take the savings account because that's where it is larger. So savings accounts we launched approximately 2 years back. And so you saw the numbers and so on and so forth. PL we launched a little earlier, maybe a year and a half earlier. So yeah, that's a little bit the journey. In terms of customers, on savings accounts, we see, as we saw it, like younger customers, more salaried and more urban. Also, see, the type of customer that comes to us depends a little bit on the proposition that we offer. So on savings accounts, the propositions we offer to the customers are, 5% off on online shopping. And so we get that type of a customer profile. Again, in the kiosk, they will kind of show you all the propositions and so on and so forth. So that's the kind of customers we are getting. On loans, to be honest, our NTB right now is very small. We launched our NTB journey about 2 months back, so it still has to scale. But the customer profile we find is not actually very different from what we see on ETB in terms of demographics. And now this is very, very early. Maybe 6 months down the line, it may look different. But at this point, it is not very different because actually, the other reason maybe because our criteria are very similar, right? Like our criteria for ETB underwriting and NTB underwriting from a demographics perspective are very similar. We look at salary, we look at which type of company they are employed with, etc. And so maybe we are hence self-selecting as well. No. This is new to Axis Bank. Yeah, new to Axis Bank. Almost all of them are existing to credit. So they have a loan somewhere. I mean, they have taken a loan somewhere else or a credit card, etc. So bureau is very much a part of our underwriting. We are not doing NTC or we are not doing new to banking customers. Yes.
Yeah, so just a quick question on the risks involved. So as we see the digital banking initiatives and more transactions happening on the digital side, one emerging area of concern obviously is cyber security, right? So we have seen some kind of malware attacks happening, and so just wanted to know what are the safeguards in place and how the bank is working towards safeguarding that. Yeah, thank you.
Yeah, sure. I think Avinash, in fact, will dive deep into the cybersecurity part of this. So I'll maybe leave that part to Avinash. But see, there are many risks actually in digital which are not there in physical. Cyber is a very, very critical one. Avinash will talk about how we are managing that. But there are other risks. So as an example, today, almost in fact, I will say all the frauds that happen in the digital space is because customers compromise their credentials. And the fraudsters are very, very smart in doing this. You may have all gotten this, your reward points are expiring or your electricity bill is due type of messages. And those are real challenges. There is a bunch of stuff we are doing around customer education, etc. There is also an industry, like RBI is kind of pushing a lot of these initiatives. But a lot needs to be done. This is something that we have to figure out how to solve. I don't think we've fully solved this for sure at this point in time. But I think we are getting better, and as an industry, we hopefully will solve it. The second type of risk is the impersonation risk, which is I open an account or I take a loan with the bank, but actually it was not me. I used Abhijit's credentials to open that account or to take a loan. And while digitally we can do a number of checks, this type of stuff is still a risk. There are a large number of checks that we built in. Our rates here are quite good, and we've kind of progressed positively as well. But that is another risk that we need to figure out how to solve. Yeah.
Hi, this is Mahesh from Kotak, right?
Yeah, hi Mahesh.
Yeah, hi. Just a question in continuation to what Vishal had asked. See, when we look, thanks for a wonderful presentation, but when we look at the data and the overall bank numbers, we don't seem to be seeing as strong a performance like what you seem to be suggesting out here, either in the form of, let's say, liability origination, retail asset origination, or even on the cost side. Where do you think we are missing here? Because you seem to be showing a picture which is completely different to what we see in the headline numbers.
Yeah. So look, if I take the liability as an example, we are today doing 7% of the new originations for the bank. That 7% comes at these economics. Is that 7% changing the bank level liability at this point in time? I mean, maybe at the margin. Maybe at the margin. On lending, I think on the specific lines where we are at scale, I think the numbers actually show. And maybe we can do some detailed demonstration of that as well. So in the pockets where we are seeing the impact come through. As we scale, hopefully the impact should translate to the overall P&L of the bank as well. We are at this point not, I mean, while we are at good scale and so on and so forth, we are not at the scale where we are changing the bank dynamics.
this is Prakhar.
Yeah, hi. Samir here from JM Financial.
Yes,
Can you talk a bit about some of the partnerships, especially how partnership economics have moved as you have built scale? So that will be helpful.
Yeah, actually, we have a dedicated session which Sanjeev will lead in the second half, which will just cover this topic. So
Sure.
maybe we'll answer that.
Just 1 minute. Sumit, you had a question.
Yeah, hi, thanks for the presentation. So I just wanted to, like one of the differentiating factors that I see with Axis is how you are spending on tech in the sense that you're hiring a lot of people internally. And when I talk to other large private banks, they are, take for example, tying up with Zeta, Sprinkler, Yugabyte, etc. So first of all, is my understanding correct that a lot of things you're trying to do internally? Second, what are the pros and cons of that? And third, does it mean that you're spending a lot initially and some of these spends could be transaction linked and therefore over a 3-4 year period, those guys will not see the operating leverage that you guys will see because you're building internally. So some clarity on how this will work. Thank you.
Yeah, great. So look, our intent is that if you look at the tech stack, there is the core, which are basically products. And there is at this point no intent to move away from the products like core banking, core lending, core card solution, etc. There is the middle layer, which is the workflow and so on and so forth. And there is the engagement layer, which is what the customers really experience. So a lot of the front end and the middle layer, which is really proprietary, right, which is where we can differentiate the experience, our intention is to insource. And we are doing that more and more. And I guess that will continue. I don't think we'll ever be in a place where 100% is insourced. We will always have a good mix. In terms of the costs and so on and so forth, a lot of our costs, and again I think Avinash will cover this, is in the kind of the core and the middleware solutions. On the front end, actually, I would argue that we are very cost effective in the way that we are building our solutions. And there is the cost angle to this, but the more important angle why we are doing this in-house is the proprietary distinctive advantage. If we work with some vendor for building our front-end journeys, that journey is available to everybody in the industry. And so there is little strategic advantage there. But if we are owning the most important experiences in-house, that's where we can differentiate, and then we can build much better experiences and get much better engagement and hence much better revenues and so on and so forth. So there is the cost angle. It is if we do it well, it is actually cheaper to do it in-house versus outsource. But there is more importantly the strategic angle, which is around what we can build and how it is our own proprietary stuff.
The reason why we kept Q&A after that, because some of these topics and questions will get answered, but we'll take the last question from Prakhar and then we'll move to our next sessions.
Yeah, hi, just a couple of questions. First, when you made a statement that probably the credit experience to this channel probably will align to a physical channel, some rationale on why you said that. The second is when you look at the entire journey, while you have been 2 years through it, are we passed through the toughest phase in terms of building blocks, or how do you think, and the investment through this channel, how you look at those investments?
Yeah. So on the first one, it's a little bit of a disclaimer actually. See, our credit models are not very different, whether we source physically or digitally, right? Like the fundamental underwriting principles are not very different. And so unless the kind of customers who are coming in are fundamentally different, we should not see much difference in the credit performance at this time. And by this, we are not early in the PL journey. We've been at it for 2-3 years now. So at this point, the risk looks good. Through the cycle, maybe the risk will normalize. So this is a little bit of a disclaimer more than a belief because we put the data out. On the second point, I think the toughest part of our build is behind us. We showed you all the platform capabilities that we built. Obviously, there is a long way to go, and there is a big scale-up journey to be done, which is equally tough. But that's a very different type of a journey and a challenge versus what we've been through in the last 2 years.
Thank you, Samir.